Welcome back to CEO Money. I'm your guest host, Grayson Armistead. And next on the show, we have Richard McCay. He is the CEO and co-founder of Tieback Realty Capital. Richard, welcome to the show.
Thanks for having me.
Not a problem. We're happy to have you on the show. Richard, please tell me about the project that you're involved with Mike Breeze in the Houston area.
Okay, fine. Well, we've been involved with Mike on some other normal house flips, not involving a disaster. And those are typically about, buying a home in neighborhoods that are turning and repairing it and bringing it up to date for what people want today. And generally that involves demographic trends where people are moving back to an area because they want to live closer to the core these days. But Houston's a different opportunity. It's not value creation like that is. It's value recovery. And the extent of the opportunity is there's 273,000 homes that were flood damaged according to FEMA. And most of those, say 80%, did not have flood insurance because it was a 1,000-year storm, dropped 50 inches of rain in a day, and they just weren't able to handle it. They had to open levees, so neighborhoods that had never been flooded were flooded. So we're able to buy homes really below replacement cost even after we do the repairs. And then we can sell them for basically what they were worth or more when we resell them in 4 to 6 months. But, and also, I almost said Cleveland, Houston is a very diverse economy. It's not the 1980s petroleum economy. It's, they have a large concentration of what's called STEM jobs, science, technology, engineering, and math-related jobs. And they have medical and resource aerospace. So, and another statistic is they have the highest cost of living, highest income to cost of living ratio in the country outside, but for San Jose is the only one that tops them. So people do have money to buy homes. They're willing. We believe they're willing to pay a little extra for something done of quality. That's what we want to do. And it's a great opportunity. We're out raising money right now with our second tranche of equity is coming in next week, and then we're actually planning on raising a much larger tranche from some Wall Street folks we've been talking to. We're going to be visiting down there with us next week. So it's very topical right now on Wall Street, the Houston opportunity. See a lot of hedge funds poking around. So we want to kind of get ahead of those guys and then have those end up being our partners. So mostly what we're working with right now are high net worth individuals. And obviously this is a joint venture with Michael, company Pinpoint, which you guys are familiar with, and our company Tieback Realty Capital, and the actual operating entity is Tieback Home Restoration.
Okay, so Tieback Realty Capital are you a local company?
We're in Newport Beach.
Newport Beach. Okay. And you mentioned joint venture. Is that to suggest that when you say raising capital that you'll be taking on investors in the project?
Yeah. We already have we have one investor right now, and he's a high net worth individual, but what's more important about him rather than his net worth is who he is. He's the former chairman and CEO of Kaufman and Broad Home Builders, which is the largest home building company in the country. So he understood what we're trying to do, and he jumped on board and got us going. And we're still looking for more what we call co-invest investors, which are those that co-invest with institutional capital, because institutional capital wants us to have a certain amount of that in the bucket. So, for example, if we're raising $25 million, we probably have to have $2.5 to $5 million co-invest capital.
That makes sense. Sense.
Yes.
So have you done a similar project like this in other cities?
Well, we've been working in Minneapolis with Pinpoint on projects, but our history actually at Tieback is that we're a developer. We have a development group. I don't work in that except for providing some financial expertise at times because I started my career as a CPA. And tax expertise because I also have a master's in tax, but I never do any work in the area. But specifically what we did here and why it made sense for us to partner up with Pinpoint. Pinpoint and Michael have the experience of the number of flips they've done. We, on our hand, have the experience of underwriting and understanding how to underwrite the assets and buy them, because we had a fund with a public REIT that was one of the housing REITs, the early ones that we loaned about $250 million of lines of credit in this space for a number of years. Those were revolvers, so they stayed out for quite a while. So we've got quite a bit of experience of understanding how to underwrite the assets, buy them. So we sort of do that piece of it, and operationally we have a lot of technology expertise with one of our partners, Omar. So tiebacks will be purchasing and operations, and then Mike and his guys pick it up from there. Once we've purchased it, they see it through completion and sell. And you may or may not be aware that Michael, in a previous company, he's rehabbed over 30,000 homes on behalf of other investors, so he knows how to execute multiple small construction projects simultaneously.
Which is no small task.
No, it's work, but we do have some software to help manage that, which he actually developed himself, worked with software developers to develop it, so it allows you to manage hundreds of construction projects and have transparency, and of course that's what investors want, is to be able to see their money at work. And what we're planning to do, by the way, we see this not as a fund. We see this as an actual company that could go around and follow disasters around and be part of the solution, get really smart about FEMA and what they can do and what they can't do, what state governments are going to do and not do, and then come in and really try to be part of the solution. And one program that Michael asked me to specifically mention is that we call our White Hat program. I'm sure there are a number of unscrupulous operators in Houston trying to take advantage of homeowners who are in a bad situation. So one of the things we're going to do is offer homeowners that if you want to try to recover some of your value that you have there, let's keep your current mortgage in place. We'll service that mortgage for you. You go rent a place, and when we're done, we'll work this out in advance, how much of the profits when we sell it you get to keep and how much we keep, and we'll base that on how much money we've invested and how long the life cycle of the investment was. Or you can get a new loan and buy us out. So it's an interesting thing. It actually makes our job easier because now we don't have to go get another mortgage, and it saves some costs.
Well, and you know what? You're actually providing an excellent service, because a lot of those homeowners have found themselves in overwhelming situations, don't even know what their options are, and you're providing an option. So that's great.
I tell you, one person we're not ready to do that yet because I got to get with lawyers and figure out what the documentation looks like. But I did talk about it with one potential client who's a doctor. In fact, him and his wife are both physicians. Mm-hmm. But she was staying at home, homeschooling the kids when this happened, and they got 8 feet of water in their living room.
Richard, I'm so sorry. I'm running out of time, but we would love to have you back on again.
Well, just let me know. You got my number. I'm happy to come back on.
All right, Richard. Thank you so much. That's Richard McCay, is the CEO and co-founder of Tieback Realty Capital. You have been listening to CEO Money with guest host Grayson Armistead. Join us tomorrow for more in-depth interviews and innovators. And remember, you can find the podcast on Apple Podcasts, Google Play, Stitcher, and anywhere quality podcasts are found.